Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar and this is effective for July 15th, 2024. Let's get started. Financials leads the pack this week, followed up by utilities and technology. Utilities coming back strong with a nice trading week of two to kind of pair it with its strategic quarter of also two, giving it a nice high score. We can show a little bit later in the rainbow charts about how that's affecting the relative outperformance. With that same note, technology having a kind of a whipsaw couple of weeks. This is the one thing I do want to highlight about the strength of the SEAF model here is overall, if you can see here, tactical month we at the one spot, strategic quarter at the one spot, and we've been fluctuating between 1 and 11 in the weekly trading. And what that has done is, though, has kept technology in the top spot still. So SEAF is doing its job in allowing for that weekly noise to not whipsaw you in and out of technology, but really allow you to capture the broader relative outperformance trend that we've been seeing that I'll highlight in just a minute. Another kind of interesting thing to note, and going back to the thing that SEAF really allows for you to not necessarily get whipsawed or bite on early movements. Watching healthcare here at the trading week of one, I believe it flip-flop with technology as money seems to be rushing in and out of these defensive, offensive sectors. Again, I've kind of said this before, but managers seemingly are a little bit afraid that we have this technology-led bubble or continually rising prices in terms for the broader market really being driven by these couple of handful of technology stocks and it's kind of like a game of musical chairs. I don't think these managers want to be there when the buck stops. So we kind of get this flipping between technology, healthcare, some of the other defensive utilities comes up here at trading week two on a trading week of a ranking of two. Kind of just really seeing this thing fall off. Really, the only consistency that we've been seeing is energy now for a consistent couple of weeks, really being in the kind of toward the bottom here. Heading over into our heat map. Healthcare showing some strong week-over-week trading of 0.31%, which is relatively strong, slightly under the 0.4% that we know on average for the trading week. And then technology almost having the reverse of a negative 0.32% change over week over week. Everything else being relatively light. Energy at 0.3, so pretty close to that bottom spot. There was a slight drop-off in utilities at 2 at 0.15% net change, but still showing some relative strength there, and financials kind of consistent across the board, just holding on to its top ranking by just being good in all three time periods. Yeah, the other thing to know, just we've like I said, that watching technology, but as we can see here. We've seen a little bit up and down in terms of favor, but broadly, SEAF has kept you in this trend. And as you can see here, we have had some nice relative outperformance since early part of May, as we've kind of hit these top favored rankings and really allowed you to stay in through some of this turmoil. As you can see, the relative performance kind of jumping up. We saw that big $9 billion come into technology and then immediately leave and then kind of come back in. So as we've been seeing this thing jump around, the nice thing about the SEAF model, it has kept you in technology despite the weekly fluctuations to really take advantage of this broader relative outperformance trend that we've been seeing. Going into healthcare, this is the reverse thing that I kind of wanted to mention here. We've seen healthcare come up on the trading week at a top, call it 1, 2, 3 spots in terms of the rankings on the trading week. What has that done? That has brought us into neutral, and we've seen these little spots of relative outperformance kind of peak up, but really kind of keeping this broader relative underperformance trend that we've been seeing in healthcare. So, if we were just trading this based on the flows on a weekly basis, we would be biting in on a lot of these little spurts of, money flowing in as managers are potentially trying to figure out where they're finding the bottom. So trying to trade this on a weekly basis kind of can get you in trouble. And we can see here why. We really do want to get out and above on this relative overperformance when we kind of see these spending a little bit more time in their favored ranking. We've been sitting a lot in this avoid neutral instead of neutral favored, and it's really shown that relative underperformance that we've been seeing. Here for utilities, again, we've been seeing a little bit of rebounding as we come back into favored. We did touch into this neutral, and we could see that resulted in a slide in the relative underperformance here. We are peaking back up and poising in the right direction for utilities. It's really just going to have to be a wait and see. We kind of saw that slide back beforehand. Looking back at the heat map, we're a little bit weak on the tactical month, so gaining a little bit of ground on the trading week. Overall utilities, SEAF signal and showing a little bit of strength heading back into the favored, being driven not only by its long-term trend, but broadly its short-term one as well. So we'll see if it could hold and build a little bit of momentum and stay in this favored ranking, kind of like we saw in May. And then the early parts of June. So we're kind of hopefully seeing a little bit of resurgence back in utilities as it is now a SEAF signal. Energy, just kind of wanted to show the reverse here. We were sitting up nice and pretty, going from March to April, getting that nice stretch of relative outperformance. It has been a pretty steep decline ever since. A little touch in favored here about early June. Broadly, this trend of weakness in the SEAF ranking has resulted in relative underperformance in the bottom part of this panel of the chart. Energy, not a good place to be. It's in a deeper void, and the relative performance is kind of showing that. Last but not least, financials. Financials been pretty strong over the last couple of months, having a little bit of reprieve here in the avoid, and we are really trying, as favored as we're heading up into this upper favored, really making some progress here to try to, we set this set this resistance down here for the relative underperformance as we seem to stop dead on our tracks and are trying to rebound as money continues to flow into financials and we can stay in this upper favor. We can hopefully rebound this relative outperformance to kind of match the broader uptrend that we had seen from the beginning of from last year up until about April. We hit that decline, trying to head back up here as we hit into favored. That is all I have for this week. I hope everybody has a wonderful week, and I look forward to breaking down the SEAF model with you next week. Thank you.